Okay, let's go back looking at the markets very quickly. You guys did well in terms of analysis, or the closest in terms of being really meticulous in terms of drawing, analyzing is, I believe, is John. So Jason, you're still pretty much rushed, and are you like in a hurry to finish your analysis? So yeah, let's go back to the basics once again. Give you guys a little bit of some more tips in terms of technical analysis. A good way is also looking at the bigger time frame first, like say, for example, the weekly chart, to define the actual range itself between demand and supply. Okay, so when I say demand and supply, these are mainly the biggest range from the last high of the actual move and the last low of the actual move. So we have, that was the last high of the actual move, this is the last low of the actual move about a couple of weeks ago. And mainly what we're trying to focus on is here with the projection of where the price is going to be. So yes, they're approaching certain price levels, and if it chooses to tank, then where will also be the price level. So at this point in time, since the bulls are in control, then what you will need to focus on are price levels that if it chooses to go to the upside, where can it reach certain price points? Okay, now I'll go through. There's also that high from the actual trend. There's also that high of that actual trend. Anything in the past, there's clearly nothing dictating from this area. But over here though, yes, there's one exactly right here. So that high is 133.86 for 133.81.3. So that's higher by at least 5 pips. Okay, there we go. So now we have a clear cut of price points where they, or prices where they almost try to test and retest it. So once again, like I said, price points, they don't go exactly to where they go, they will test and retest. For example, here they tested it, retested it, retested that, retested and touched pretty much all also on that high. Retested this first price point from here. Okay, so what happens now? What if it chooses basically to drop? Then we're just going to define quickly where they are. So when the low of the actual move itself is on that low, and go basically in the past, it's not valid because the price is still pretty much over there. There's that higher on that side, that is also very valid. Nothing over here, nothing over there. Here, last one is also through that, a very valid point of that high over here from higher high, lower high perspective, and then the high of that bar. So that means then that if the price chooses to drop either sometime by tomorrow, Thursday or Friday, then it's a really clear cut that the high of last week was a really good strong price level. That if it chooses to drop, then it will struggle to go through here first, and it has the range between the previous highs of that, which actually tested of the high of that, also the high of this, the low of that. So okay, now looking at the price action alone, the bulls are way too strong, too powerful. Can they really push it up? Probability yes. That if they will continue from last week's movement, creating new higher highs, higher lows, then the probability that the price can go to the upside to break that high is also likely or highly probable. So what will be approximately as well, that if it chooses to go further, then at what price level can it go and continue to go to the upside? So there's also one thing that we would be able to create actually. So from that last low and the last high of the movement, creating 690 pips, approximately around that area, 690. So from that low to go to about 690 as well is about the 138, making then a new higher high from that last high in January 26, or the week of January 26, 2013. So let me go back about from here to here, approximately 620. From there to there, there's actually more than 1,000 pips, but it's also from the continuation part of that. But it's just been currently consolidating to the sideways movement, but because of that new high, because technically speaking, if this one is channeling to the downside movement, these two double wouldn't exist. They should be here. They'll be pumping the price all the way down here by September. But we are in September, October, November, December. So this is also the pretty much month of it's reporting season, pretty much a reporting month. Hence, that's why they're pushing the price pretty much everywhere to the upside. So if it's a reporting season, then perhaps by October they could retrace a little bit before another big push close to the Christmas rally. Okay. Now, but based on price itself alone, looking at that, and the probability that it could continue further is also more than likely. Now we looked at the dollar index. Everyone's viewpoint is, yes, there's some uncertainty. It's a doji being a level of demand. The question would be if that would be just a minor correction before a more push to the downside based on the last few days, also last couple weeks of the price, where sellers are too powerful. Alright, so now we've created price points, just looking at the highs and the lows, and at least we have a cheat sheet that once we go to the daily chart, it's already being pretty much done for us. We can go a little bit more in detail. That if I go through, then definitely that would be a little bit more accurate based on looking at the daily chart. This one will be a little bit more accurate, pointing to there. That was way accurate. That was way accurate because we're looking at the highs and the lows. In between though, now we can see how it's also getting close pretty much on that low. Alright, I'll put through there. There's one there to the exact one, and there's one in between that we can't see towards the weekly chart. So there's also that low on that end. Nothing here, but those are not low. But technically speaking, it doesn't really matter as yet, because if our projection is that they could push the price a little bit further, then we would be able to see here very clearly that these are the last price points of a supply level on where the price can go. So anywhere around these points within this range is pretty much just the amount of price that if we choose to go long, then there's some form of a lot of selling pressure, not unless the Feds will say something. Now, if the Feds say something really good that could affect the price to continue further to the upside, to continue the weekly chart, then there's going to be a lot of force, a lot of buyers. Okay, now, but we are reaching in a level supply. We have a lower high, we also have a lower low based on the daily chart. We have a higher high though, but overall we also have a higher low. Okay, now a much better scenario is simply that if the price reaches around these price points, then you can have a better opportunity of selling it. So that's approximately what, 40, 60, 70 pips to the upside. The biggest one of them all, the king of them all, the price to beat is at 134.52. That's 90 pips pretty much around this level. can they push it all to the upside, and then can it drop further, or by Thursday can it create a doji or some sort? Absolutely, it can do that. So what if this is also the new pivot point? This is now where the next step on where you're going to analyze. So technically speaking, this here all the way to the bottom, they don't really matter at this point in time. The major ones that you're going to matter in the demand, that if it chooses to drop, are these price points here, these levels, 1, 2, 3, 4, like an elevator or stairs, right? So the highest of them all with the probability, and then if they choose to drop further, then these are the price levels that they can continue to go further. All right, now let's create and draw trend lines. It's seldom that I did see you guys actually drew your trends. So from a shorter time frame perspective, if you're just looking at the whole screen, then this is the last low, that is the last low too, higher low. Right, if we're going to continue, where is the last low of the actual move? This is also the last low of the actual move. Funny enough, it's predetermined already where the price is at this point in time. Are we making it up? No, definitely we're not. So if this is now the last high within that movement, so the price is currently stuck between a downtrend and an uptrend. So they need to make a decision. What if it's just going to be a flat lining type of thing? So either one, they will break it out tomorrow, or two, this is going to fail and head back to at least fill in the blanks at this point in time with the primary uptrend. Hence, then that will be a much better strategy by saying, okay, I'm going to leave it alone for now. There's two price points in terms of trends, one to the downside, one to the upside. But if this is going to be a flag, and it'd be a bullish flag, then the probability that the bullish flag to continue to the upside is more than likely, since we are in an uptrend. From that higher high, from that higher low, yes, we have a lower low from this point. This one basically won't be validated, because if this is going to be that strong, that that price should also be down here, not up here. Okay, now what if this is just a minor one then? Then later at one point in time, then it will continue to go through the downtrend somewhere, sometime. Then it's going to create some form of channeling formation down here too. So, but if not, then that will just, from this perspective, bam, continuation to the upside to continue the trend of the channeling, of the channel movement. Okay. Alright, so if we go back, yeah, so we'll go back to on the weekly very briefly. So it's just been channeling pretty much since the past 9 to 10 months, almost a year. It's hovering around this level. So if that would be really this strong, then they can continue to head back on this side of things, since that low is higher compared to that, compared to that, compared to that. Over here is simply an uptrend, definitely. Here's a bunch of higher highs, here's a lower high, but this is now pretty much a higher high from here, but over here is still a lower high. Okay, now if I really want to be a little bit more accurate in terms of that, then you will see a clear picture that we're currently reaching at a level or at a point. In actual fact, there's actually a really cool one right here. So from that primary, that's the real primary downtrend, secondary downtrend. So if I now go through a daily chart, so there's still some more room in order for the price to head back within this good strong supply level. Okay, now just to test it, if the theory basically holds that the price has room to go to the upside, then at least we will be able to make part of our theory then that if the price continues, then technically speaking we should buy, right? Okay, let's go through. Gonna test it. Current price 133.60. If this is the last low of the move, that would apply last part of the low 133.25, 133.60. But this is not a proper confirmation of the actual low itself. So this is the actual low itself, 132.54. So about approximately at 90 outstanding pips. Let's go through and have a quick look. 133.60. Oops. And then the last low, that is 132.54. 132.54.41. I'll just put that as a 41. Okay. Just use. Let's go 1, 2. Interesting. So it's just showing 0.2 20 pips. Okay, let's test it. Okay, let's buy 20. 132. 41. So 2 to 1, 135.98. 135.98. Alright, so we have pretty much OCO order right there. We have a stop and a limit that if it, really technically speaking, because we're testing part of that, if it's still on an uptrend, then the probability that if we're dictating that the price can continue to go further is highly probable, then I will put my stop through there. But if the price continues to go to that side, then I'm going to trail it all the way through there. But because the Feds are coming in tomorrow, that if this one fails, then this is definitely not going to be the last low, right? And if the test basically fails, then we're going to close the test even before we hit basically on the stop, because technically speaking is now stating that this tertiary uptrend is a failure. Then that the probability then now that the price can fail, since they test, we have a new lower high, the next part that they're going to retest is simply back on this point before it can retest to go to the upside, retest to the downside, break out, and then continue. Okay, so that's what we should be doing. Any questions? Part of that example. So we covered every detail from a multiple time frame perspective all the way down to defining the actual supply level and defining the actual demand level or demand levels with your trends just to dictate where the highest probability of winning is going to be. Alright, hi there. From yesterday or last night's live trading class, so basically we went long prior to the Fed's announcements due to multiple time frame analysis stating that if last week's input that the bulls are currently in control, then the probability that they could push the price further within this red zone, and to break that red zone, which is the area of supply, to go through that last pretty much high of the trend of that move will also be a probability. Okay, and hence going through to showing to the 1 hour time frame, this is what we basically did. So we went long at 133.609, currently at 177 pips, pretty much in profit. And this was prior to the Feds, which boosted the price all the way to the upside. But to be honest, the markets, they do lead like breadcrumbs. So they pretty much, some of them already know prior to the reporting is going to be. So about the Trader Dojo today, you can see here around an hour prior to the actual reporting itself, they already did break the supply levels, increase in volume, also increase in price, that the probability that they're going to push it up is highly probable. And also, as part of the plan, is simply that part of the test, if the bulls currently will take over, then this is clearly the new pivoting point of the trend itself from a higher high, higher low perspective. And the next part of the move is pretty much a higher high than a higher low. Alright, so pretty much this is what we did. So what I'm going to do right at this point in time, since I'll say if we're looking at a 1 hourly chart, it is just stabilizing. There's a lot of, because of that big momentum to the upside. I know that the UK market is currently open at this point in time, but a lot of spinning tops and dojis at this moment. So we are currently in a new level of supply at this point in time. What I'm going to do is at least kind of close 3/4 of the position. Okay, so that being said, let me go through close. So there you go. And if I'm going to go show trading history from here to here, it's approximately around 177.2 pips, and I close some of the positions here too at 15 pips. So what I've done is pretty much just leaving 20% of the positions for longer term, more of a swing trading type of environment, heading towards around that 136 area, even though part of our plan is also that there could be another 300 pips that will go further with a good strength to the upside, probability that a continuation of the bulls to the upside solo is also highly probable itself. Alright, so this is it for me. This is Reynaldo from Enlightened Super Trader Education. I hope you enjoyed that part of the live trading scenario and the live case scenario here. And if you have any questions or information about our education, please don't hesitate to email me at contact@estetrader.com or visit our website at www.estetrader.com, estetrader.com. Thanks a lot and have a good one. Bye for now and happy trading.